Facebook, we are live. How are you? Hope you are doing well. Apologies, I'm a little late today. We've had a very busy morning. We had our room session with our Total Trader swing members this morning, and we've got probably the most amount of possible trades that we've had for a long while. So I'm going to swing in. You can just see here, we've got on three of the six strategies, you can see that we've got lots of possible trades. Now, they're not all setting up. I'm not about to get into what's the best part of probably 15 to 18 trades here, but we do have some that are ahead of the others in terms of a possible setup. So it's gone from being fairly quiet. We've had little periods where one or two of the strategies have had lots of possible trades, but currently this is the first time when we've had three. Now, this doesn't necessarily mean that a possible trade is going to meet all of the criteria and end up setting up. So there is no direct correlation between the amount of possible trades either across the board or in one strategy. It's not a direct correlation between that, as I would say here, and there, as you can see, the number of actual trades that you end up getting. But it's important to understand that if you get more possible trades, it's a little bit like buses all coming at once, then it may mean you have to spend a bit more time doing your analysis. So it's not that you always get one trade a week, two trades a week, three trades a week. It can vary in terms of the number of possible trades as well as the number of actual trades that come out of that. Now, what I want to talk about before we look at some of the major indices is we had a nice trade, or a nice half of a trade banked. So the guys that are on our Beat the Banks program and our Total Trader members, a lot of our guys are trading our monthly setup on oil, and you can see here we had the trade set up on the 5th and we closed out. You can just see it there. I'll get these off the screen. We closed out at the 2-to-1 mark, so the ratio of 2-to-1. So we had a nice 2-to-1 winner on this. You'll see this in a second. So closed out the 2-to-1 just off the high. So we had a really nice trade, moved nicely, wasn't in it for that long. However, I am still in on half of the trade, because one of the things we've been doing as a group is actually looking at data in terms of the viability of running these positions longer. So rather than simply just run the whole trade, what I've decided to do is up my risk ever so slightly, but split the risk in half. So I've essentially got out of half the position you can see here and banked just over 4K on Friday. And I'm now, if you look, you can see this red line shows that I am still in the trade. So I've still got the two elements of the trade there. So think of those two positions there as one trade. So I banked one trade on Friday, these two lots that you can see here, and I've got two parts of one trade running. So the trade's essentially split in half, okay? So I'm running the second half, and what you'll notice is with this second half, there is no stop, or it looks as though there's no stop, but actually my stop is at the break-even level. So I've actually got my stop at the break-even level. So now it's a case of managing this trade, because the data that we've put together, what we've done is we've looked at the original trades over a 16-year period, which are in this column here, and what we've done is tested two trailing stop versions, because a lot of the information out there when it comes to things like trailing stops, a lot of books will say, you know, you need to move your stop to break even as quick as possible, or trailing stops will save you from having as many losers or capitalize on winners. But that's only the case if consistently the form of trailing stop that you use will do that. And the only way to get any comparable is to look at the data. So we've taken 16 years worth of data and looked at how trailing the stop increases the return. So what I've done is decided to increase the overall return, but split that in half and trade the two alongside each other, in the hope that over the next 5 to 10 years that will increase in terms of the amount of profit. So at the moment, this profit is not mine. Okay, this is just sitting there. That's the current profit that I'm in. My stops are here, but now I've got to look at this in a completely different way. The first part of the trade was a simple fixed 2-to-1. The second half of the trade now is a rigorous trailing stop protocol based on if the price goes higher. So for me, I can't actually do anything now on this until we get to the equivalent of a 3-to-1. If we get to the equivalent of a 3-to-1, then I will trail my stop up a certain amount. I don't just simply move it up below a low or where I want, I move it up relevant to the data that I've tested. All right, so that's the live position I'm in at the moment. As I've said, we've got lots of other possible trades for our swing traders. So we may, when we do the update for this next week, we may be in some other positions as well, and I will update you as that happens. So that's the live trades. Let's go and have a little look at the indices and start where we normally start, which is have a little look at the S&P. The S&P here, a lot of our guys had a nice trade just here. So just as we came into the start of the year, the S&P is moving on. We're above on the futures here, above all the all-time highs. We're clearly above the previous highs from August. We've got clear of those. So there's nothing in the way here. I'd say in terms of the futures, the next psychological area of resistance would be the 4,000 mark. That doesn't necessarily mean we'll reach that, but the next area there is the 4,000 mark. Price, as you can see here on the daily chart, has made a nice new high, and at the moment it's starting to pull back. So a little bit of a sell-off today. If we were to get in and around this zone here, so where we've got the previous highs and we've got the 21 moving average, this could offer up another opportunity for our swing traders. At the moment it's a little bit of a distance away, but as I said, that could offer up an opportunity there. In terms of our against the trend traders, well, we're past the previous resistance, so there's no against the trend trades here. What we would have is a possible trend line break if price could take out those previous highs from August and then get below the trend line that you can see in here. So there's nothing for our trend line break or our reversal traders unless price was to get a fair distance down and show us that it wants to break that trend line and give us a new low. So it's all about the width of trend traders on the S&P. If we do a quick comparison of the Dow, go and have a little look at the Dow, see where that is. The Dow is currently doing a similar thing. You can see there. So again, the new high and the pullback. So mirroring the S&P, very, very similar over the short term and over the slightly longer term period as well. Interestingly, if we just go and look at the NASDAQ, again, the NASDAQ is having a little bit of a sell-off today. And again, similar scenario. So there are those previous highs. We broke out of those previous highs, pulled back. And as you can see here, we have made another new high. So all three of the major US indices could be offering our with the trend traders a pullback opportunity in and around that area where we've got the previous highs and the 21 moving average. But price would still have to do a certain set of criteria once it got down there for the trade to be there. Quick look at the DAX. If I can find the DAX, we'll have a little look, see where that is. And the DAX not made such a clear move above its highs. We actually had a losing trade at this point here. We had one of our reversals set up. Nice setup back at the previous highs. There was nothing wrong with it, but price didn't get down towards the trend line where our target was. It pushed back up and stopped us out. Now price, you can see clearly here over the last few days, has gone higher, and we're actually pulling back towards that previous support. So there's no reversal trade for us, a bit like what I said with the S&P. Because price didn't do what we wanted, we don't simply keep trading it short until it goes the way we want. We would need to see price show us that it wants to go lower now. Because it's pushed that little bit higher, it would have to show us that it wants to go lower, and then it would offer us up potentially a short in and around this area here. Now, because it has gone higher than those previous all-time highs, some of our guys will be looking for a trade here. Now, the challenge with this one is it's pulled back to the previous support. That isn't a criteria for us to get in and take a long, because we're looking at the overall market position plus our criteria. So what we would be looking for here is a move down towards the 21, but the challenge there is the 21 is below that previous resistance. So a lot of our guys would actually want the DAX to push higher first before they would consider trading a move with the trend. All right, I hope that helps a little bit in terms of how we're viewing the indices and how we would consider possible trades on there. If we go and have a little look at oil, well, obviously, you know, we're in oil at the moment, or we've had, or our guys have had the winner on oil. I'm still in it, and I'm looking for price to go higher. The only thing that stands in its way, and again, this isn't a reason for me to do anything, is we've got we're above those little batch of previous lows. We've got the weekly 200 moving average, but it is flat, and price has not really paid that much attention to it. It's gone through it on other occasions. So really our next area of resistance is all the way up here. If you look, and I'll actually just line the resistance up a bit more effectively. So if I just get rid of that there, I'll just line that up. is we've got the highs just here of 2019, and you can see if I just draw in there, we've created a little bit of a zone with the Jan highs of 2020. So really in terms of resistance, we've got an area or a zone in and around this area here. So might be that it wants to get up to $60 a barrel here on the futures. If it can get above that 200, you can see here it's reacted a few times there, broken it there. So again, we won't know what it's going to do until we see what price does. So having a little bit of a pullback today on oil. If I just show you the move there, a little bit of a pullback on oil. But again, if we can get a move, there's plenty of clean air up towards the $60 mark, and then the resistance further up on oil. Euro is a potential opportunity. It's actually passing that now. We were looking at a possible pullback here. You can see we've got the new high, pullback to the moving average, but the rest of the criteria haven't happened. So a bit of a sell-off here. So Euro is moving down. Next port of call would be the previous highs that we've got here and the weekly 50. You can see the longer term trend line slightly below that. For us, there could have been a with the trend opportunity here. That's probably gone now because of the move you can see today. This level here, which is the 2018 highs, this would remain our against the trend level, either here or we'd need to see price break the trend line, and then we would look for opportunities just there. There isn't anything really in this area here. We don't trade the pullbacks from the 50, but some people would consider a pullback at a slightly lower level and go with it. Okay, some guys would trade there, possibly trade at the trend line, but that's not what I and a lot of our guys would do. They would have been looking for a slightly earlier entry, which hasn't happened. So yeah, for me with Euro, I'm going to watch and see if it gets down to its 50 on the daily, or whether or not, as a result of that, or where we are now, we move back up to these highs of 2018. But that's really the area there, 1.25, and those highs just there. A little look at the pound. The pound's been a little bit choppy. We've obviously got the trade deal in principle now. I don't know what's been going on in the news today. I've been too busy. But if we see here, look, we got the new high. We're back at those previous highs. So pound has just shunted that little bit higher, got above those previous highs, but at the moment it's hovering back round at that level. There could be some possible opportunities for us here in a similar way. Some of our more aggressive traders might be looking to get in if the price shows a little bit more upside just around this level. Some would want price to go higher first and get into that zone, because there's plenty of clean air on the pound if we do go higher. And then you've got the 1.4 as the numerical or psychological resistance, and then you've got the 2018 highs. If I just pull those in, just jump to the weekly chart, 2018 highs that little bit higher there. Good. So I'm going to leave it there. That was quite a long video. So hope that was useful. What do we got going on at the moment? Well, we've got plenty going on with our total trader guys. As I've said, we've got loads of possible trades, lots of new strategies coming in for them in 2021. We've got our January kickstart. We're full for January kickstart. There are places on our March kickstart, so go and subscribe as a free member, and all the details are on your dashboard. We have got places for the March kickstart. Jan kickstart starts on Wednesday this week, and we are going to have a couple of free webinars coming up in, I think it's February. So lots going on. Hope you had a good break over Christmas, and I'll be updating you with more market reviews, more live trade reviews around the Monday time, but I'll be putting some other videos up this week, so I will look forward to speaking to you soon.